If you're holding altcoins and you've lost complete faith in altcoin season, we have some breaking information to talk about, something that could change the entire faith of altcoins. And finally, altcoin season, we have quantitative tightening potentially ending sooner than we think. So we're going to take a look at what that does for altcoins in previous markets, and we're going to tell you guys what to expect next. So if you're new here, make sure you subscribe, hit the like button, and let's talk about it. So the breaking news is the fact that JP Morgan expects the Federal Reserve to end quantitative tightening next week. This is coming out of absolutely nowhere. We know that the Fed is having the FOMC meeting on the 29th of October. That is going to be next week. And if that coincides with Jerome Powell announcing the end of quantitative tightening, that could be very bullish for the markets. We know that right now rate cuts are likely already priced in. If you take a look at what we have in terms of rate cuts, we can see that, the markets are predicting at about 99% a rate cut of 0.25 basis point on October 29th, and then another rate cut on December 10th. But what is most interesting about this is that we've heard Jerome Powell in the speeches that he's done at other FOMC meetings, or even in the FOMC minutes that we usually get every other event. We have seen them wanting to stop quantitative tightening, and the initial goal to stop quantitative tightening was actually in mid-2025. Now, fast forward to where we are right now. We're towards the end of 2025, and quantitative tightening, although has slowed, has not ended just yet. And with this prediction from JP Morgan, we could see the end of quantitative tightening, so the end of restrictive monetary policy, to be completely done by next week, which would boost liquidity in the markets. If we take a look at what has been happening over the last years for the Fed and what quantitative tightening really does to a market, if we look at their federal balance sheets, we can see that from the very top of this chart, this is April or May of 2022. This is when the Fed pivoted from quantitative easing, which is essentially buying treasury assets, injecting liquidity into the markets. From that day forward, they started to do quantitative tightening, which was reducing the asset they have on their balance sheet, thus selling treasury assets. And as we can see, their balance sheet went from almost $9 trillion all the way to where we are right now, right around $6.6 trillion. Now, Jerome Powell has said that the Fed had a goal to reduce the balance sheet, reduce the assets on the balance sheet, and bring it closer to $6.6 trillion, which is what they've achieved over the last 3 years. So JP Morgan's, prediction of the Fed ending quantitative tightening next week with the FOMC meeting makes a whole lot of sense. And that is going to make things a lot brighter for the markets, because it's now been 3 years of restrictive monetary conditions, liquidity being very restrictive on the Fed side of things because they've continued to be selling. They've not renewed anything, and they're not buying assets for their treasury. They've been selling them, and now they're likely going to be stopping this. Now, I just want to point out a huge caveat here. Just because they're ending quantitative tightening does not necessarily mean that they're going into quantitative easing. You have to make the difference between the two. A lot of people are going to say this means that QE starts, and it does not mean that QE starts. We've had Powell say before that for QE to really start, interest rates have to be basically at zero. And right now, interest rates, as we all know, are not at zero. They're at 4.25. So there would have to be a massive amount of things to happen for them to really start quantitative easing, because before they get to quantitative easing, they have a whole lot of interest rates to actually bring down to help the markets before having to inject more liquidity in the markets. But all in all, ending quantitative tightening is a huge bullish signal for risk on assets. And if I take you back to 2017, we had a bull market in 2017. Bitcoin did well, Ethereum did well, and alts did phenomenal. And if you take a look at what happened to the balance sheet of the Fed, were they doing quantitative tightening? Were they doing quantitative easing? Well, they actually weren't doing a whole lot. They just maintained the balance sheet from practically the end of 2024 all the way to almost the end of 2017. Nothing was happening on the balance sheet of the Fed. Of course, then we had COVID and a massive injection of liquidity in the markets, huge bull market in 2021. But ever since then, it's been restrictive monetary policy, and that is potentially going to end with next week's FOMC meeting. So huge bullish news. And if you don't believe me, let's take a look at the charts. First and foremost, you guys have seen this chart time and time again if you are subscribed to the channel. If you're not, do me a favor, hit the subscribe button, and as you're down there, make sure you like the video. It does truly help out, and I can't thank you guys enough for all the support. But let's do a few things with this chart. Let me put this on a full screen so you guys can get a better view of what we're looking at here. But looking at the altcoins versus Bitcoin, this is going to be very key because I'm going to put you guys into a perspective where we can overlay the federal interest rates as well as the federal balance sheets and see what typically happens when these events occur. So first and foremost, this is the altcoin season of 2017 right over here. And we also have the altcoin season of 2021 right over here. Now, as we can see, we're definitely not in an altcoin season. You know, altcoins are still going down versus Bitcoin. And if we take a look at what has happened historically, when the Fed has stopped quantitative tightening, if we open this up, this blue line here represents the federal balance sheet, the line we were just looking at on the Fed's website. What we can see is this blue line right here actually stops going down, which of course means that the Fed stops quantitative tightening on, August or September of 2019. And this coincides with the bottoming of altcoins versus Bitcoin. So this is a very telling signal that the Fed ending quantitative tightening had an impact on altcoins versus Bitcoin. So that is number one. The only caveat to this is that this then coincided with a massive amount of QE as we had a COVID-19 pandemic and everything went to bonkers. We had the Fed inject a bunch of liquidity and we had that altcoin season happen. But again, I just wanted to highlight that when QT ended, this relationship between altcoins and Bitcoin also bottomed and it allowed altcoins to go up from that point on. Now, if we remove the Fed balance sheet and you take a look at interest rates, this is another very telling indicator that what happens to altcoins as we get federal interest rate cuts. So if we modify the scale so you guys can actually see something, as we said, the Fed ended quantitative tightening in 2019 in September, and at that time, the interest rates were just around 2.25%. And of course, we are much higher right now. But as you can see, the Fed had started slowly but surely cutting interest rates. But it wasn't until, March of 2020, when the pandemic hit, that the Fed decided to bring interest rates from 1.75 all the way down to 0.25, cutting a massive amount and holding these rates all the way through the pandemic, all the way through the end of, quantitative easing. And then they started quantitative tightening and bring the rates all the way back up, all the way to roughly, 5.5, which is absolutely insane. But from that point on, we've gone from 5.5 to 4.25. So the reason I'm bringing this up is because in 2019, we had the end of quantitative tightening. Then in, a few short months after, in early 2020, we had the Fed bring interest rates basically to zero and then pump a massive amount of liquidity in the markets, which I don't believe is going to be a similar thing this time around, because I don't see the Fed being as aggressive on the interest rates as they were during the global pandemic, because economic conditions are completely different. The Fed is going to bring interest rates down, which is going to be a bullish thing. They're likely going to end QT, but they're not going to inject as much liquidity in the markets that they did in 2019, 2020, and 2021. But that's not to say that risk on assets won't go up from here on out, and that is why I remain very bullish on what happens next for altcoins, because I do think we are getting towards this end of, the downfall of altcoins versus Bitcoin. I do think there is going to be another uptrend for Bitcoin. And if we take a look at it, well, Bitcoin is right now sitting at $110,000. So time and time again, people freak out every time Bitcoin gets to this, $102,000 level, or it breaks below 110, or whatever the case may be. We're still in a macro uptrend for Bitcoin. We're still moving onwards. And to really get that altcoin season, we want Bitcoin to continue going up, to bring more hype, and quantitative tightening interest rate cuts are going to both help Bitcoin. And as liquidity slowly rotates from Bitcoin to Ethereum and to altcoins, that's when you're going to see altcoins really move. But until that point, we are still monitoring what Bitcoin is doing, because Bitcoin remains king. And if we take a look at something very interesting that I wanted to highlight here that not a whole lot of people have noticed, if you take a look at the others minus USDT, so if we take a look at altcoins outside of the top 10, you remove USDT, the stable coin, and you compare that to Bitcoin, we've actually, pretty much bottomed on this chart. If you go to the liquidation event, it went all the way to negative 0.1, which is kind of crazy. Back to some levels in June of 2023, we can see that we are currently right at the bottom of this range, which we were back in 2017. If I zoom in on this, in 2017, right over here, we were, right around these levels before the massive altcoin season. If we go to 2019, which is, right over here in September, we're a little higher, but then the COVID-19 pandemic brought us almost to the same level before a massive altcoin season. And right now we are hovering around these same levels for this relationship. So again, I am remaining optimistic as to what's going to happen with better liquidity conditions for risk on assets. A whole lot of people are buying gold. Gold hit a new all-time high just a few days ago. A lot of people are, trying to find safety. A lot of people going into Bitcoin because it's digital gold. Then you have people going into the stock market because you have trillions of dollars that are poured into the markets by employers or everybody that has their 401ks, and everybody investing in equities because right now it's, a bullish time to continue buying equities, but nobody's really taking a look at Ethereum or altcoins. And I do think that liquidity is just going to slowly get there as we continue moving forward in time. So that's the thesis I have for you guys today. Keep your eyes peeled for what's going to happen about quantitative tightening. Likely going to be getting more information of that on the FOMC meeting date. And as you're watching this video, in just a few short minutes, we're going to have the CPI print that is going to be coming out at 8:30 a.m. This one here is going to be interesting because right now the consensus is 3.1% on a CPI year over year. Core CPI for the month of September would be at 0.3. So watch if these inflation numbers come in line with predictions. If they do, it's going to be bullish. We know the Fed has kind of pivoted from looking at inflation data to looking at labor data to, have those future rate cuts. But if the data comes in line, it does reaffirm those rate cuts. And if they come below, it's even better. And if they do come higher than what is expected here, there may be a little bit of bearishness in the space. But again, we all know that some of that inflation is due part because of the tariffs that are imposed on a bunch of countries. So keep an eye out on the CPI print. That is basically the only data that's coming out, even though the US government is still shut down. And last but not least, to leave you guys on a, I don't know what kind of note, well, CZ has actually been pardoned by Donald Trump. So as we all know, CZ, the ex-CEO of Binance, fully pardoned by Donald Trump, and he is saying that he will do everything they can to make America the capital of crypto and advance Web3 worldwide. So, of course, let me know what you guys think in the comment section below. If you are new here, make sure you subscribe, hit the like button. Thank you guys for the support. And if you want to stay up to date with everything crypto, check out the first link in the description below. That is our premium Discord. I'll catch you guys in the next video. Peace.